Welcome to our guide on analyzing equity mutual funds in India. This step-by-step approach will help you make informed investment decisions. In today's video, we'll demystify the process of analyzing equity mutual funds specific to the Indian market. Understanding these concepts is vital for growing your wealth. Equity mutual funds primarily invest in stocks. In India, they offer a way for retail investors to participate in the growth story of the Indian economy through diversified portfolios. Fund analysis is crucial to filter out underperforming schemes and select funds that align with your risk tolerance and financial goals. It's about smart decision-making. Let's begin with the key quantitative metrics that you must evaluate when looking at any equity mutual fund. Always check the 3-year and 5-year rolling returns of the fund. Crucially, compare this performance against its designated benchmark index to ensure it's generating alpha. Risk ratios like standard deviation, which measures volatility, and Sharpe ratio, which calculates risk-adjusted returns, are essential to assess how much risk the fund takes for the returns generated. Two vital cost factors are the expense ratio, the annual fee charged by the fund, and the exit load, a fee for early withdrawal. Lower costs generally mean higher net returns for you. Next, let's look under the hood at what the fund actually holds, which is the portfolio analysis. Review the fund's sector allocation to understand where the money is invested. Check the top holdings to ensure you are comfortable with the stocks and the level of concentration. Understand the market capitalization mix, how much is allocated to large cap, mid cap, and small cap stocks. This directly impacts the risk and return characteristics of the fund. The portfolio turnover rate tells you how frequently the fund manager buys and sells stocks. A high turnover might mean higher transaction costs, so look for a rate that aligns with the fund's stated strategy. The people behind the fund are just as important as the numbers. Let's analyze the fund manager and the asset management company, or AMC. Look into the fund manager's experience and track record. Consistency across different market cycles is a strong indicator of competence. Also, evaluate the reputation and stability of the asset management company. A long-standing AMC with good governance practices is generally a safer bet. To wrap up our guide on analyzing equity mutual funds in India, let's summarize the essential steps. Remember to systematically evaluate quantitative metrics, dive deep into the portfolio composition, and assess the capabilities of the fund manager and the AMC. Your next step should be to use these tools to analyze potential investments, consult a financial advisor if needed, and start building a robust investment portfolio for your financial future. This video is for education purposes only. Investments are subject to market risks. Read all the scheme-related documents carefully before doing your investments. Thanks for watching our video. Like, share, and subscribe to our channel and click the bell icon to get latest updates. Comment below your learnings. We'll see you in the next video. Jai Bharat, Jai Hind.